Good day to you, everyone. You're welcome to another episode of Insurance Talk Show. I am Bola Adebaju. Today, I'm going to be talking about my handbook. There was an handbook I wrote on life assurance policies. That's what I will be discussing today. I have a lot of frequently asked questions there that I answered. Basically, it's going to be life. Insurance is about life businesses and non-life. Those non-life businesses, we call them general businesses. Life is about individuals. When you are talking life, I mean life. The life of a human being, the life of a person. So when we are talking of life assurance, it pertains to everything about a life, somebody that is alive. That is what the interpretation simply is. So I have a lot of questions here. So we have companies that underwrite life businesses. We have companies that underwrite non-life businesses, and we have companies that underwrite both life and non-life businesses. But that is not what we are going to discuss today. I'm going to concentrate more on life businesses. But there are some misconceptions about life that I want to correct before I go ahead. Some people will say, when you're talking of life assurance policies, they will be thinking of death, as in it's all about death. There's no other thing about it. No. It is not only about death. Life policies are not only about death. It's not about people dying. You have some other benefits that you can get apart from somebody dying. And life policies, they are policies of investment. It depends on the type of policies you want. But at the same time, under life policies, life assurance policies, you can also get investment aspect of it. It's not only about people dying. Then I also want to say that life policies are contracts of benefit. When you say something is a contract of benefit, you are referring to the amount of claim being determined at the inception of the contract. You don't need to wait until anything happens before you can know what you're going to benefit. Because that's what happens in non-life businesses. It is when you have issues that you will know what you benefit. Like it is when accident happens now that you know the cost of the damages, and that is when you can determine how much you are going to get. But when you are talking of life policies, they are contracts of benefit, and you know the amount you are going to benefit. You know the amount you are going to claim at the inception. As you enter into the contract, you know already how much you are going to benefit. Like you want to take a life policy now, you can say you want to insure your life for 5 million. You know it already at the inception. You want to insure your life for 10 million. You know it. So that's why we call it contracts of benefit. And it is not about debt. Not only about debt, about investment, about maturity. Some people, they survive their policy period and they collect their money back. So we have all kinds of policies like that under life assurance. What are the benefits of life policies? As in the benefits, the uses. You may ask yourself, why are you telling me? What do I gain? What do I benefit from taking up life policies? I would say, number one, it is an opportunity to make provision for your beneficiaries in case of anything, in case of any eventuality, in case someone dies. I won't say in case you die because people don't want to hear that. In case someone dies. So it is a way of making provision. You have peace of mind. The moment you have a life policy for your family, for your wife, for your children, and their beneficiaries, then when anything happens, you can always take the proceeds of that life assurance policy. That's one benefit. Then when you have life policy also, with some organizations, they provide compensation for disabilities, compensation for loss of job. In most cases, it is life companies that do that. I've given people that kind of policy, loss of job policies, and there are terms and conditions that apply. You can be covered. The moment you have that life policy, it can be an extension, because most insurance companies don't want to cover loss of job alone or disabilities. They don't want to cover it alone. It's always an extension on your life policies. So you have to first have a life policy before you can have disability cover, loss of job cover, and other things. At the same time, there's some insurance companies also that will just consider you and cover you for loss of job because of some other things you have been doing with them. Maybe you have some other policies. Some even still cover it under non-life policies, non-life insurance, you understand? So it depends on the insurance company that you are relating with. But these are some of the benefits you can get under life assurance policies. It is also a means of savings for future financial needs. Like I mentioned, the investment aspect of it, investment is like you're saving towards the future. Maybe you have something, you have a plan, the education of your children, you have a project that you want to do. Life policies are some of the policies that you can use. It will cover your life, and at the same time it will make provision for investment. So we have policies like that, both life and investment benefits on it. So whichever one you need, it's just good you talk to a professional, you talk to a consultant, and you get the right advice. Then there's a tax relief. That's another benefit you can get. You have a tax relief, you have a discount on your tax. If you say you have a life policy, there are some things that will be considered when you are paying your tax. I know a lot of people don't do it. Most people don't know about it. But it is something that you are supposed to benefit from. If you have a life policy, it is important you mention it when you are paying your tax. I want to believe it should be the same way that they do outside Nigeria, in other developed countries, because that's how they do there. And I believe the same thing happens here in Nigeria. They use it as collateral for loan, especially mortgage loans. When you have a mortgage loan, they'll say you take a mortgage policy. So the mortgage policy will cover anything that happens during the mortgage period, especially when you're talking of debt. We have a lot of people who took mortgage loans and they die before the payment of the loan ends. So it is this mortgage policy that will take charge of the balance payment. So it's another way of saying you can use a mortgage policy for collateral. And another benefit is that through these life policies that people take, you are compelled to do a medical test, because we want to know the state of your health, how you are, before we say we want to cover your life. So in the process of doing this medical test, a lot of people have discovered that they have hidden ailments. they have terminal diseases which they never knew about until they decided to take life policies. I have seen people like that, and it was now another story. The insurance company will now tell them, you have to go and take care of yourself, go and treat yourself before we can cover your life. So it's another benefit for you because it helps you to discover who you are. It helps you to discover hidden ailments in your body. Those are some of the benefits. Now, let me talk about the types of life policies we have. What are the types of life policies we have? We have individual life and we have group life. You know, individual life includes the whole life, the term assurance policy, education policy, mortgage policy, credit life policy, keyman policy, and you have annuity. I may not be able to expatiate on all this today, but maybe after some time I will take them one after the other. It may be in our next episode. So these are the individual life policies that we have. You see, all these policies that I mentioned, you may get to one company and they give it another name. Like I remember one insurance company that I worked with, we had one investment policy that we called IVAL. IVAL. When you look at it, when you compare it with another insurance company's product, they may likely be the same thing, but the names are just different. So, but there are some principles that are put in place to come up with these products. So the principles are always the same. In most cases, they're always the same, but they give different names. So they are all life policies. Then we have a group life policy. This group life is a compulsory one. Under law, if you have more than 5 employees and above, then you must have group life policy for your employees. It is compulsory. And you may be penalized if you don't do it. So if you're an employer out there and you don't have group life policy for your employees, I think it's high time you put your office in order and take group life policies, or let me say group life policy for your employees. And you are supposed to pay. It's the employer that pays that. It is not the employee. So how you are going to do it, I don't know, but it is your duty to get group life policies for your employees. That is all about the products in life assurance, under life assurance policies. And well, group life also is wider than this. The explanation, there's so many things that I need to explain on that, and definitely I will come up with all these products. There will be a day that I'm going to discuss all these products one after the other, but today I just want to give an introduction of what life policies are all about, what products we have, and what you stand to benefit having all these products. Before I go on break, I want to state that you have a line open for conversation, and that's WhatsApp conversation 0806 192 3347. 0806 192 3347. So you can send messages to this line and it will be responded to. All your messages will be responded to by the time I come back. And let me mention the vacancy I have for you today. I have a fast growing broking outfit on the mainland that needs an experienced underwriter for immediate employment. If you feel you are qualified, just send your CV to 0802 303 3444. 0802 303 3444. You will have the details also on the page of Unstoppable Radio Instagram page. So after this program, you can go there and check. I'll be right back. All right, you're welcome back to Insurance Talk Show. I am Bola Adibaju. I've been talking about life assurance policies. I've explained what life assurance policies are all about, what you stand to benefit if you have these policies. Let me say one or two of the policies. You may not take everything. So there's so many things you can benefit from having life assurance policies. So who pays the premium and how much? Do you want to take a life assurance policy? Who pays the premium? In most cases, it is the life assured that pays the premium, the person who wants to take the policy. And sometimes it is the person who has insurable interest also. Like when you are talking of mortgage policy now, it is maybe the financial institution that will give you the loan, that will pay the premium. They may still come back to add to your expenses, administrative costs, anything, but they are still the ones that will pay for the premium. So, and it is being determined by the type of policy. Whosoever is going to pay is determined by that type of policy. Like I mentioned, for some policies it will be the individual, for some it will be the financial institution, to be the beneficiary. So it depends. You have to ask your consultant, your company, your insurance company, or your broker to know how to go about it. Then you have your employers too. Like when you're talking of group life assurance now, it is the employers that will pay the premium for that. And who is the beneficiary? That is, who do you pay the benefit of these life assurance policies to? Number one, it can be the policy holder. The policy holder is also the life assured, and everything is determined by the class of insurance policy you take. It can be the named beneficiaries, because when you are filling a form, it will be asked. You will be asked to state the names of your beneficiaries. It may be your wife, it may be your children, but you state their names there. So if anything happens, these are the people that they will pay the money to. It may be the administrator of your estate. That's the estate of the deceased. The estate of the deceased, and I think they just pay to the estate of the deceased, and of course it's the administrator that will handle all those ones. So the administrator will now distribute to those they want to distribute to. But there are some cases like that. There are some cases it will be the assignee. The assignee is someone who the life policy has been transferred to. Like maybe before the person dies, or before the person may even be alive, and decides to transfer the life policy to another person. So it is that assignee that will now be the beneficiary. It won't be the initial policy holder. So what are the what is the maximum benefit? Do you have a maximum benefit? When you say you have a life assurance, there are some insurance companies that have a maximum amount of cover that they can provide for a life based on their financial status and maybe their capacity, the capacity of the insurance company. That can determine the maximum benefit that you can have on your life as a cover. Then it can also be determined by the financial status of the policy holder. You know, you can't pay more than you can afford. So you will determine it. If you can afford a life cover of 10 million, you can afford a life cover of 100 million, well, it's okay. And the insurance capacity can carry it, then you can go ahead. So you will determine the maximum amount of cover that you want to have on your life. What are the basic requirements? What are the basic requirements for life policies? You know, there are some basic requirements that are the same everywhere for all life policies. And number one is the proof of age. You must give us a proof of age. How old are you? Because there's an age limit for us to cover your life. So you must provide proof of age. You must fill the proposal form, you complete the proposal form. Sometimes you may need to take a medical test. You may need to go for a medical test, especially if you are above 40 years. You may need to go for a medical test. And of course, you have to pay the premium, and you must have insurable interest in whatever you want to insure. You may not be the policy holder. You may be the beneficiary, but as a beneficiary, you must have insurable interest. Example of this is financial institutions. They do mortgage policies for their clients. Those who want to take mortgage loan, they do this insurance for their clients. So we will say the financial institution has an insurable interest in the life of the person they want to give loan to. Then the medical test that I mentioned, I remember that I mentioned medical test, and it is not everybody that goes for medical test. It's usually for people above 40 years. And if you are not up to 40 years, you may not be required to go for medical test. At the same time, if the sum assured is above a limit, every organization has a limit, maybe 50 million and above. Whether you are up to 40 or you are not up to 40, if the sum assured is up to a particular limit, some insurance companies will tell you to go for medical test. So it depends on the underwriting factors of the insurance company. So all that I would want to say is that you just you cooperate with the insurance company, whatever they tell you to do. And who are these people that can take up the life policies? I said 18 years and above. It's between 18 years and 65 years. You cannot take a life policy if you are below 18 years. That's why we need your proof of age. If you are coming to say you want a life cover for your life, you want an insurance cover for your life, then we ask you a lot of questions. Before I round off, let me just mention some circumstances of claim. You know, when I started, I mentioned that life assurance policies is not only about death, because a lot of us believe it is only when somebody dies. So when you tell people, come and take life assurance for your children, you know, come and take education assurance for your children, come and take life assurance for your life, they feel that this person wants me to die. No, it's not only about death. So there are some circumstances you have apart from death that you can claim on. You have your money back. We have death, we have maturity. That's full maturity. If you save for 18 years and the thing gets to 18 years, that's full maturity. You get your money back. You have partial maturity. You can decide that you can't afford up to 18 years. You can't afford to pay the premium for up to 18 years. And you want to get your money back. So that is partial maturity. Partial maturity. And you have cash surrender value too. You have permanent disability. You have medical bills. You know, if this is covered. There are some policies in which medical bills are covered. So, and you have partial withdrawal. That's a loan. I remember that in one of my companies too that I worked with, we had a product like that you can take a loan. It's a life product, and one of the benefits was that you would have access to loan, to a particular percentage of your contribution. So those are some of the circumstances in which you can claim under life policies. What happens in case of inability to pay the premium? Somebody still called me just yesterday, and she started a live policy some years ago, and she couldn't pay the premium for some time. Of course, she said she went to the insurance company and she told them. Although I didn't know how she resolved it or what they concluded at, but I was now asking her some questions. She said she will get back to me. So you have cases like that in which you will not be able to pay your premium again. So what do you now do in such situations? You can convert to a paid-up policy. You can convert to cash surrender value. The policy can lapse. Okay, you can redate it also, from the commencement date to a maturity date. That means you change your maturity date where you have large outstanding premiums to pay or large arrears of premium to pay. You can change the date, you can redate it, but that will be done with the involvement of the insurance company. You have to let the insurance company know. You have to go to them and let them know that, sorry, I'll not be able to continue this premium. They will advise you on what to do. You will now choose. They will give you all these options and you will choose which one you want to do. What exactly do we mean by paid up policy? What exactly? I think, okay, I need to explain this, but maybe I'll continue that in our next episode. So I'll be talking about what paid up policy is, because I mentioned it, that if you don't have ability to pay your premium, what options do you have? So I'll continue the discussion on these topics in our next episode. If you have any question, you have any contribution, you have issues that you want us to help you resolve about insurance, you can always send a mail to victoriaadegbaju@gmail.com, or you can still send your WhatsApp message to this number that I mentioned initially, and I will get back to you. 0806 192 3347. 0806 192 3347. Thank you for listening. I am Bola Adegbaju. Till this time next week, think business, think insurance.